Welcome back. Let's also now get into conversation with the management at JK Tyres on those fantastic numbers. In fact, we're joined by Mr. Bajoria, and let's get straight into that conversation with him. Mr. Bajoria, to start off with, a fantastic set of numbers. Congratulations. What's helping you to see that sustained buoyancy in demand? What are some of the factors at play? Are you seeing a higher pull from replacement orders? Is that what it is? Or have OEM orders actually grown?
This is, of course, the sharp recovery in economic activity, and then the festive season, and then the personal mobility, where now people are preferring personal vehicles, and of course, good monsoon. So this has come from both the replacement market as well as the OEMs. And exports has also given us a very good push in the top line growth.
Okay, and do you foresee any moderation in demand going forward, particularly in Q4? Are you adequately placed to cater to the surge that you're seeing in demand?
Well, we still see that the demand in Q4 should be about the same, because we are finding that the OEMs, which were not so strong in Q2 and Q3, are now showing revival signs in a much more way. And therefore, and then exports and also replacement is showing very good signs. And in fact, I must tell you that it is from all the three sectors: the passenger car radial tires, the commercial vehicle tires, and the farm tires. And in fact, I can tell you that the demand from rural is very robust. And I don't think that that is going to wane away so easily, at least definitely not in Q4.
Okay, now you have a strong hold in the CV segment. What's the kind of visibility you currently have when it comes to orders? Do you see incremental flow? Because when we were speaking to Ashok Leyland, they did say things were bottoming out. What's your sense?
We are also getting the same from our other OEM manufacturers, the vehicle manufacturers. And I think the Q4 is also going to be equally good as the Q3. And I'll tell you, all our plants in India, our 9 plants in India, are all operating nearly 96% capacity utilization. And therefore, we are right now seeing a very strong production growth as well as sales growth in JK Tyres.
Sure. Now, you also told us that the farm segment has seen significant growth. Penciling in some key trends so far by the end of FY21, how do you really see the overall mix evolving?
Well, see, as I said, all the three replacement market is, let's say, around 45%, and OEM is again about 35-40% and likely to grow further, and exports is in the range of about 15%. So going forward, I think if OEM goes up, then we have some capacities where we can still get more tires out of it, out of all the plants here. And therefore, I would say that both replacement and OEM are going to contribute to our top line and therefore the bottom line.
Okay, and what's been the benefit from anti-dumping duty on Chinese tires? Do you also see perhaps some more scope to increase your export revenue as clients continue to look for alternates, when it comes to supplies to China?
Well, yes, but let me tell you that the anti-dumping has not really shored up our top line to the extent that maybe impression getting created. Well, of course, 3%, 4%, 5%, yes, I can accept, but not really, not more than that, because see, our products have been very well accepted in the market, and we've been here now more than 40 years. And therefore, brand JK Tyre has a very big pull in the market. So I would say that, yes, exports are also increasing. And in fact, the North American markets as well as the Latin American markets have been pulling our products tremendously.
Right. You know, on the subject of exports, the Prime Minister has spoken extensively about the Atmanirbhar Bharat scheme, you know, increasing local manufacturing, pushing for exports, as well as aided by the PLI schemes as well, which got announced. How is it that you see export opportunities for players such as yours?
Well, look, we absolutely welcome Prime Minister's initiative of Atmanirbhar, and we can really grow exports. But I can tell you that despite all the outstanding performance in this quarter, we are right now experiencing tremendous shortage of containers. And that is really, really hampering the growth in exports. And I would imagine that going forward, maybe we will be getting some better traction on the containers. And that is where, that is probably the only bottleneck at this point of time. And we are looking forward to increasing our exports further.
Sure. You know, we were chatting with the CEAT management the other day, and they flagged off that rising raw material costs could put a brake on their margins in the fourth quarter. Do you also foresee a similar situation, that the margins would get hampered because of the RM costs, or have you planned to undertake any price hikes to try and mitigate the margin impact?
Well, certainly raw material prices are looking to get firmed up a little in Q4. But for that matter, we have slightly inched up our prices to take care of that, but that's hardly anything. So we think that we'll be able to maintain our pricing and also our profitability, unless the prices of raw materials, including natural rubber, shoot up, which I hope they will not. Although we are seeing some trends in the north direction.
So what gives you optimism of maintaining profitability at a time when raw material costs are going up? Because with offices opening, even your operational costs would go higher.
Look, thank you for giving me an opportunity to explain to you. We have done some really outstanding work in this direction of cost control in these COVID times, starting from beginning of April right up to now, end of December. And you'll be happy to know that in every area of our operations, we have been able to contain the cost. In fact, we have shown remarkable downsizing of costs, whether it is fixed costs, whether it is the other costs. And so the one major cost I can tell you is that we have reduced our total borrowings by over 1,000 crores in the last 9 months. And that, you can imagine, has given us very good savings in the interest cost month on month. So this is just an example, and that this exercise of cutting down on the cost wherever possible is continuing full blast in all our JK Tyre plants and our other activities like whether it is marketing and sales, or whether it is raw material purchasing, or whether it is in the overall costs in terms of, as I said, the fixed costs. And looking at all the existing contracts and so on. So I'm sure we should be able to maintain similar performance.
Okay. Also, just, how has COVID impacted traditional business in the sense, in terms of digitization? We've seen, for instance, CEAT step up its efforts when it comes to R&D in the last few years. What kind of an edge does JK have on this front?
We have one of the finest R&D setups in Mysore, which is known as Raghupati Singhania Center for Excellence, where we are doing our huge R&D exercises and initiatives and day-to-day activity. So, and if you visited the auto show a couple of months ago, we have introduced two very, very novel products. One was the Smart Tyre, which is online display on the driver's in the cabin on the actual tire pressure and the actual consumptions and so on. And this is applicable for commercial vehicles and for cars, as well as on the 2-3-wheelers. So that's a fantastic product, and we have been getting very, very good reviews, and it's already in the market since last couple of months. So that is one. We've also introduced a puncture-proof tire, where particularly for the car users, and that is already in a limited way being tried out, and the initial results are very, very encouraging. So these are all results of our R&D efforts, and there are some more in the pipeline for commercial vehicles, which I would talk about a little later, a couple of months later, because you would appreciate the sensitivity in these things.
Okay, we take a break on that note. Thanks so much for joining us, Mr. Bajoria. Great speaking with you this morning. A quick break, we'll be right back.